If you're looking for a business funding, you have all kinds of offers, all kinds of possibilities, right? You can get a business line of credit, you can get a business loan, you can get equipment financing. But one type of business funding that business owners need to really pay attention to is actually a working capital loan. Okay, a working capital loan is kind of cool because it gives you the possibility to get funded real fast, but also to actually use the loan for things that really matter. So your working capital. If you think about your working capital, the very technical definition of working capital is actually assets. So your short-term assets minus your short-term liabilities, right? That's working capital right there. So you're able to actually use a working capital loan to finance the gap between your short-term assets like accounts receivable, inventory, and so on and so forth, and your short-term liabilities, including your accounts payable and other short-term debts. Okay, so here are the key takeaways that I want you to really pay attention to. There are many types of working capital loans to consider, but the thing is that you need to decide on the specific loan that's right for your industry, that's right for your business, and that's right for your vision for your business. And before applying, you want to gather information like business financial statements and formation documents, and also set up a realistic repayment strategy. What I'm trying to say here is that if you are going to apply for a working capital loan, you need to have a clear idea about how much you can borrow and what you're going to do to repay the loan. So the very first thing you want to do is to know your credit score and reports, because everything flows from there. And when I say know your credit score and report, I'm talking about your personal credit, but also your business credit. Because see, the thing is that unless you are applying on an EIN only basis, when you apply for a business loan, whether it is a working capital loan, whether it is a term loan, whether it is a business line of credit, the lender is going to check both your personal credit but also your business credit. So personal credit, you know it. This is your FICO score 300 to 850. That's pretty straightforward. But your business credit actually goes from 0 to 300. So 0 to 300 that's for 0 to 300 for the SBSS, but also 1 to 100 for the Dun and Bradstreet paid as score. So the higher your score, the better, right? So on your business credit score side, if you have anything above 80, you are good to go. You are good to go. So very first thing you want to know, you want to know your business and personal credit score before applying for a working capital loan. So once you have the info about your personal credit score and your business credit scores, you are in a better position to see what you can qualify for. You are in a better position to see whether or not the specific loan that you want, the specific working capital loan that you want is actually reachable. Like it's within your reach based on your credit score. So basically, you want to decide what type of working capital loan that you need. You have to understand when it comes to working capital loans, I think I've said this before, you have all types of loans that could qualify as small business, as working capital loans, short-term loan, SBA loans, lines of credit, business credit cards. As a matter of fact, yeah, a business credit card can be a working capital loan. Why? Because a business credit card allows you to finance short-term items. You can use a business credit card to actually get to actually pay for inventory. You can use a business credit card to actually pay some suppliers. If the supplier accepts you to pay them via credit cards, okay. You can also use invoice factoring or invoice financing as a source of working capital loan. Why? Because basically, when you have accounts receivable and if the customer is taking too long to repay you and you need cash real fast, you can actually go to an invoice factor. You can go to a factor, a company that specializes in invoice financing and invoice factoring, and they will advance you a certain amount. This could be 80%, this could be 90%, based on the quality of the underlying receivables. And because the percentage depends on the quality of the underlying receivables. In other words, the quality of your customers, okay, quote unquote quality, okay. That I mean the credit worthiness. That's the better word. The credit worthiness of your customers, and so that's actually a good way to get working capital loans. You can also use a merchant cash advance as a working capital loan also, and if you happen to process electronic transactions like credit card sales, or if you have debit card sales, you can actually get a merchant cash advance because you are considered a merchant. If you have a merchant account, you can get a merchant cash advance real fast. So if you want to apply for a working capital loan, after knowing your credit score and credit report, after deciding what type of working capital loan that you need to figure out how much loan you can afford. I want to insist on that because a lot of small business owners are so they're so gung ho in getting a loan, but they don't think about the repayment aspect of things. It's very easy to qualify for $1 million in business funding. Big question is how are you going to repay the loan? What kind of revenue are you going to generate to actually to repay the loan? And those things you can't just leave them to chance. You got to plan them. You can't be operating on a random basis and hope to actually achieve anything. No, you're not going to get that way. So you have to plan things ahead. And planning just means that you have to figure out how much loan you can afford. And what I mean by that is you have to really you have to go through the numbers yourself. Okay, go through the numbers yourself, and the same numbers that you are going through, the lender may ask you to provide them too. And the lenders wants to make sure that you are indeed that the loan that they're gonna give you, you indeed you indeed have the possibility to repay the loan. Now there are several factors to consider when determining your loan affordability. Right, this is not something you just do out of the blue. No, you got to be very specific. You got to be very granular, and everything starts with your annual gross sales, because sales are going to provide the revenue, the cash inflow you're going to really tap into to repay the loan, right? Cash inflow, cash outflow. So your annual gross sales are going to be the first one to really think about. The first factor to think about. Your personal or business creditworthiness, I already mentioned that. Your current debts owed, the financing type that you want, but also the lender where you are actually applying for a working capital loan. If you want to apply for a working capital loan, you also need to understand that you got to compare and contrast working capital loans and lenders. Okay, I always say that even if you have a great relationship with your bank or credit union, don't just assume that they have your best interest at heart. Your company might not be the profile they're looking for, so they might not have the right setup for you in terms of business funding. So that's why you always want to diversify your strategy. You want to explore further avenues for business funding. Okay, so you can actually reach out to an online lender and apply for a working capital loan. You can actually go to an alternative lender and apply for a working capital loan. Don't actually stick to your traditional lenders of like your bank or your credit union, like your Wells Fargo, your Bank of America, your Truist Bank, your Fifth Third Bank, or your Navy Fed or your Penn Fed. No, you want to compare and contrast lenders to see which one actually got your back. Okay, you have to understand that when it comes to working capital loans, you have a variety. It really depends on the repayment window you are contemplating. The longer you are asking a lender to commit to you, the more interest they will charge you, and the more let's say the more conditions they might have. What I'm trying to say is if you are asking for a working capital loan and you want to repay the working capital loan over 10 years, the conditions that the lender will ask you will be way more than if you are actually thinking about repaying the working capital loan within, say, within 24 months or within 18 months, right? There is a big difference between 24 months and 120 months. 10 years is a long is a long stretch. Okay, so and also when it comes to the type of lender, you want to ask yourself: Has the lender does the lender have experience when it comes to dealing with companies in my sector? Because if the lender already has loaned amounts to other companies in your sector, you bet that they have experience in your sector, and that's kind of cool. Okay, so in terms of lenders, you have I'm showing you on the screen here a short example of working capital lenders: Bank of America, Wells Fargo, On Deck, National Funding, and Tacor Financial. If you want to apply for a working capital loan, you also need to gather required documents and information. Because the thing is that the lender wants to have as much info about your business as possible. I mean, in this economy nowadays, it's so important for lenders to mitigate the risk real fast, especially default risk, because you have like lenders now understand that there are certain things that they cannot predict, so they are increasing their risk mitigation levels. Can you imagine? Can you imagine what happened during COVID? All of a sudden, the whole economy, the whole global economy was brought to a halt, and we were all sitting home, and businesses were shutting down, and businesses were filing for bankruptcy like crazy, and you have some business borrowers all of a sudden had no cash to actually repay their loans, right? So this really gives you an environment where lenders are really careful about they're careful about whom they lend to, what kind of businesses the lend to, and also the kind of what I call credit risk they take on their balance sheets. Okay, so you have to do the same thing. You have to do the same thing when it comes to choosing the lender that works with you. So you want to gather required documents and information, and by that I mean articles of incorporation. Okay, and you want to also have bank statements, business name registration, business tax returns, your 1065 or your 1120S or your 1120, among others, your outstanding debt information, so that the lender can really see what kind of DTI information you have. So DTI, debt to income ratio, your ownership structure, your profit and loss statements, but also your LLC operating agreements. Okay, and so secured business loans require proof of collateral and possibly an appraisal. So something to really think about. And if you are applying for an SBA loan, you probably also need a business plan, business history, summary, lease information, as well as financial projections. So once you actually have done all that research, all that preparation, it's now time to apply for the working capital loan, right? So you know exactly what kind of loan that you want to go after, what kind of loan that you want. So you just apply. You can apply online. You can apply over the phone. You can apply actually at a branch. So depending on the institution, right? Some institutions are better suited for one method over the other. Like if you were to apply for a working capital loan at a traditional bank, I always say that it's easier. I mean, not easier. It's a more convenient, but also you are able to increase your odds of approval, your success odds by actually applying at a branch. Apply at a branch. Don't just apply electronically. I mean, they want you to apply electronically because the bank is trying to save money. They were trying to reduce costs. Okay, but in your interest as a business owner, it's just a lot easier and a lot better for you to apply at a branch. Okay, but if you are applying with an online lender, you have no other choice than to apply online. Okay, so but the thing is that if you want to secure a faster approval process, you need to apply the way the lender wants you to apply. Now, what do you do if your application is denied? Your loan application is denied. Well, this happens. Unfortunately, there are cases where you might have you might have to deal with denial, and this is not the end of the world. Okay, you can still rebound, if you will. It's all about how you organize yourself. So if your loan is denied, you got to really ask yourself, why was the business loan denied? The lender has to tell you. The lender has to document why they denied your loan in the first place. So at least you have an excuse. I mean, an excuse. You have a reason why your loan was denied, and you can better prepare your next round. Okay, and you can also get a business loan with no money. You can really think about the best strategy. Did it deny you because of your credit worthiness, your credit history, your credit score, or your business history, or your business lack of history, or other stuff, or maybe your financials, your DTI, your metrics also. So it really depends on the type of decision that led them to deny you in the first place. Also, one thing I want you to remember here is that your repayment strategy has to be pre-established. Okay, it has to be established before you get approved. If the lender understands that you have thought about repayment even before applying, there is a bigger chance of them approving you. Okay, so setting up the right payment repayment strategy before applying for a working capital loan can help prevent loan default, and that's what you want. You want to prevent loan default. So to manage your loan properly, you should make sure you understand your loan agreements, have a realistic business budget set up, and plug in your business loan repayment. Pay your bills on time to prevent late fees, penalties, and default. Minimize other debts. This is something that you can really that can really help you big time. And also, you want to check your personal and business credit scores regularly. Like, don't just check them like every once in a while. No, you have to really make them. You have to make the check regular. It has to be regular, and you want to speak with your lender before missing a payment to learn your options. Right? It's all about having a conversation with your lender. But one thing for sure, if you follow the steps that I just gave you, you can apply for a working capital loan for your business, and you can get tens of thousands of dollars, depending on the lender that you have chosen, but also the specific type of working capital loan that you actually have you actually are interested in. As long as you have thought about repayment strategy, as long as you have thought about affordability, like you're able to afford that loan amount, you should be good to go in the very long run. And this can give you the working capital loan will give you the funding necessary for your business so that you can really avoid, I would say, operational disruption. In conclusion, to this conversation, I've explained to you how to apply for a working capital loan. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.